Always focus on the big picture, big idea. It can be hard, especially when you're zoomed in on your chart like this on a 1 minute time frame. You're looking at a stock here, for example, BBAI. It opens up, you get a nice little push right here, then it gets a nasty flush out, and then it just trends all the way back up to new highs. And the stock's got big range. It was one moment up here at $12.60, and then it flushes out to 11.60s. That's a $1 per share flush out. Then it grinds up $1.50 to new highs. You're telling yourself, man, I screwed it all up, and the stock came back, and I would have been up in the profit if you were to focus on a stock like this. It's always a good habit to zoom out on your charts to see the big picture at hand, the overall trend. When you zoom out on your charts, you could see this stock recently had a big downfall, and then it bottoms out here at this $10 and starts building up off of 10. Going back to yesterday, all this stock really did was set up a basic pattern that everybody is taught to look out for. This is technical analysis 101. Everybody's taught to look out for triangles, wedges. These are basic, easy patterns. This stock perks up pre-market here, gets a nice little pop, and when it flushes out, anytime you have a stock, either if it breaks out from the upside or the downside from a specific pattern, always look for that stock to come back to the area it broke out from, that pattern, and either hold as resistance or support. You could see here, this stock after hours popped up out of the pattern. It was holding as support. It fell through it, came back. Then this morning pre-market, we're gapping up. We're gapping up and out of that pattern. So where would you be wanting to look for this pattern to hold, for this stock to hold up for any type of move higher? You'd be looking at that $11.50 for the stock. If it pulls back from 12.25, its highs up here, if it pulls back, you're going to be looking for that 11.50 area to hold up and for the stock to build up off of that area for any type of bullish move to the upside. And you could see with the price action here this morning, how quickly prices shot down and then bounced right up off of it. And if you were to focus on the big picture at hand, and it can be hard to do this, but with time, practice, you're getting that experience and screen time in by seeing this stuff over and over and over again, become adaptive to it. So a good play on BBAI here if you knew what you were doing. Prices quickly flushed out, bounced off that 11.50, and it's got a nice trend all the way up to 13.20s. That's a nice almost $2 per share run right there, from 9.40 to 10.50. So in 1 hour, this stock moves up $2 a share. Just focus on the big picture at hand. Always the big picture. Don't let price action punk you out. Don't let that 1 minute chart punk you out. And even looking at bigger time frames. Look at here on the 3 minute chart, for example. You could see clear as day. This stock set up a triangle and a wedge right there. Stock rips up out of that pattern. It pulls back. Look at right where it bottomed out at. Right at that 11.50 and where it broke out from that pattern, and up she goes. Areas of interest, levels. Don't overcomplicate things. That's why I tell a lot of people, especially if you're new, keep your charts clean. Don't rely on indicators. Focus on the candlesticks, chart patterns. Don't overcomplicate it because you're going to overlook the simplicity of it. And that's the way it should be. Simplicity. Look at these charts as if they're art. Here's another example of a basic pattern breakout. We're looking at a 10-minute chart here, TKAT. You can easily identify with your eyes that there was a wedge or a triangle that formed right here over time. Stock breaks up out of that either wedge or triangle, whatever you want to call it. It's a wedge. We break to the upside, run up there to $4 a share. and now it's pulling back, and now it's pulling or holding at the area it broke out from that pattern and continuing to build up off of that. It's gearing up to run up and test that 4 again. And if it breaks up over 4 right there, it'll get a good run up all the way up here to $4.50. So breaks up over 4, then you'd be looking for 4 to hold up as support right here, build up off of that and push up to 450, pull back. See, stocks like to move in stages. That's why I've made multiple videos trying to preach across the board. Try to focus on areas of interest and focus on psychological levels like $3.50 right here, $4.50, because this is where everybody is putting their buy and sell orders. Nobody is randomly buying and selling at $3.61. No, they're going to focus on these psychological levels, even levels. So every 25 cent, every 50 cent, every $1, it's going to act as natural support and resistance. All these big banks, institutions, they're all trading on these psychological price levels. Even here with TKAT, it ran up recently almost to $5, so just below $5. Then it fell all the way down here. And if you were to just focus on that 350 level, some people, they try to pinpoint price action. And to me, you can't really do that. Don't try to pinpoint price action, because you're just going to stress yourself out, is what you're ultimately going to do. You're going to have a brain overload. If you guys remember and seen that movie, Wolf of Wall Street, the scene where he's out to lunch with his broker buddy, and he's telling him all day you're crunching these numbers in your head and you're just going to spaz yourself out. Don't do that. Don't spaz yourself out. Keep it simple. The KISS method.